Hey everyone, today I'd like to talk to you about the differences between pre-qualification, pre-approval, and credit approval, and what you need to do right now to put yourself ahead of the competition. My name is Mike Ackes, team leader of the Ackes Group at eXp Realty. Let's get into it. Number one on the list is the pre-qualification, which is the least vetted process and the only one I highly recommend you do not do when starting your search for a home. Pre-qualification is only a discussion between the lender and the buyer. Based on the information the buyer tells the lender without giving any documentation or running credit. This is a waste of time for the buyer and the real estate agent that's spending hours and hours of time showing you homes. Imagine a scenario where after months of searching for a home, you find one you really love. You apply for a mortgage and you find out you don't qualify because of your income or your credit is too low and you need a credit repair. As silly as it sounds, it happens more than you think. I've been there early in my real estate career, so please do not get a pre-qualification. Number two is the pre-approval. This is the most common approval that majority of buyers need to go through before looking for a home. The pre-approval process is going to take you online to fill out a loan application accompanied by pay stubs, tax returns, and bank statements while running your credit. By doing this, the lender has everything they need to confidently issue a pre-approval. In this scenario, they run you through processing and underwriting only after you find a home and you are under contract. Number three is a credit approval. This is the least common process, but it's the best form of approval a buyer can apply for. It's funny how that works. The best approval a buyer can apply for, but they don't do it. There are two potential reasons that I could think of when it comes to a buyer not going this route. The lender doesn't offer it because they don't want to scare the buyers, or the real estate agent doesn't explain the massive benefit of credit approval. Some realtors may not even know about this option. A credit approval is the same process as a pre-approval, but taking it one step further. The extra step is having the lender run you through processing and underwriting, which is typically done when you are under contract on a home. By doing this extra step, you now have a mortgage in hand, and all you need to do is find a home, do a home inspection, appraisal, order title, and that's it. This type of approval is as good as cash. You can now waive mortgage contingency and close as quickly as a cash buyer. Now let's recap this. Pre-qualification is based off a conversation of trust, no documentation. Pre-approval is filling out an online application, handing in docs to support it. No processing or underwriting is done. Credit approval, same as pre-approval, but taking it one step further, going through underwriting and processing and having the mortgage approved. Good as cash. So I highly recommend every buyer go through credit approval. This will put you in a great position to win when you're up against other buyers bidding on a home.